Stocks are up strongly today, and after the news this morning, it's very likely the December year-end Santa Claus rally will start earlier than expected. We got November CPI inflation coming in at the lowest levels since early 2021. We had a CPI come in at 2.7% compared to 3.1%. That's a big miss to the downside. And then core CPI minus volatile food and energy came in at 2.6% compared to 3% estimated. Also, a big miss to the downside. So, inflation, at least according to these numbers, is cooler than expected. Shelter inflation is showing big signs of disinflation as well, and that's at the lowest since 2021. We had a lot of fears that inflation would be accelerating due to the tariffs, but we're not seeing that in the data, at least as of now. This combined with the unemployment rate ticking up to 4.6% from 4.4% for November, and 65,000 jobs only being added. In my opinion, the combination of the unemployment rate ticking up and inflation being much lower than estimated shows that the Federal Reserve should continue to cut interest rates and supports that case and opens the door for a January rate cut. The stock market is loving this as of now, and the market's up today. I think this is going to accelerate the year-end rally, in my opinion. We need to see some good data on inflation being lower than expected. This combined with Micron, the high bandwidth memory chip maker, reported really good earnings, and they beat, and their guidance was incredible, off the charts, almost like Nvidia's guidance in 2023 that really set Nvidia on a monster run. We're seeing that with Micron now too. The demand far exceeds the supply for their high bandwidth memory chips. Look, I mean, with the AI infrastructure build out, you're going to need a lot of memory bandwidth, and we're seeing that with the demand for Micron. So that's helping the AI data center and infrastructure market for chips, for their high bandwidth memory chips. And I think a combination of a lower than expected inflation report and Micron's earnings should help this market have its year-end rally that we've been waiting for, starting a little earlier than I expected, because I didn't expect inflation to be this low. And this is getting closer to the 2.6%. I'm sorry, 2.7% on headlines, getting close to the Fed's 2% target. So that's going to accelerate the year-end rally, in my opinion.